Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Sunday, January the 8th, 2023. As Globex opens here on Sunday afternoon / early evening, the S&P and the NASDAQ are both continuing to move higher. And what I'm seeing is just position adjustments coming out of Friday's expiration and not wanting to be either short or long going as we go into tomorrow or Monday. On an Elliott basis and with our current counts, I believe it is just a finishing move for here in the S&P, likely the third C wave up. And that continues to have resistance at 39.37. And that was generally after Thursday's call. How I had left it was that the employment situation number on Friday would definitively be the catalyst for direction, and left it there. And that would include direction higher or lower. Now, the number itself did not necessarily reflect a bullish tone, although the interpretation was. And then that right out of the gate, they pushed hard on that buy button and it sent the market higher. And then that just set the tone and it remained that way. So even when during the second half hour of trading, the market did decline, reaching session lows before again just being stormed straight higher, finishing the day strong. Now, the NASDAQ itself was up nearly 300 points. That's the cash market, with the Dow up 700, the S&P up well over 100. In fact, the SPX was finishing up, about 87 points. Now, in terms of the count, it still appears that we're following through on the ABC, on the minor two and the completion of that minor two. But as I did leave it on Thursday, that if we started to rally, we needed to get, first of all, above that 39.07 level, and then had the possibility that we would make it all the way up to next resistance, which is at 39.37. That still now appears to be the case. So dropping it down to the hourly chart, what it appears is that we basically had a 1, 2, 3. This is the 4. And now still have a little bit more to go in terms of getting it up above 39.29, which was pretty much the high on Friday, and then on up to 39.37. Once that's achieved, we'll have reached our resistance. And again, counting this whole thing out, coming back from here, that's where minor wave 1 is actually back even a little bit further. Minor wave 1 comes in right there on December the 22nd. So we have an ABC, an X, an ABC, X, A, B, C. So the C still being in progress. 1, 2. It could be just an extension in 5, because I can basically go 1, 2, and this is probably 1, 2, 3. But so we may have even a little bit more, depending on how this gets counted out. But right now, I would be expecting that we should probably continue to move higher. Now, whether it completes the whole package within the Asian markets when they open, or the European markets when they open, or if it holds tight and waits for the US again tomorrow. Now, I have not changed in terms of seeing this immense rally, which went against the grain, basically, even with the Fed governors coming out. I think 1 or 2 came out during Friday's session telling don't get carried away, that the rally would not lean the Fed into making a decision to either one, pivot or raise less or change their strategy in controlling inflation. In fact, if we really took a look at the employment situation numbers and the revision for November, it is not. I mean, it's good news for people going back to work, but as far as the inflation fight, it's not good news. It's inflationary. And we're going to continue to see that fight rage on, so to speak. So what can I look for tomorrow? First of all, if we look at the moving averages, they are all basically pointing higher. The 20, the 21, basically coming right above the 200, which now, as you can see, is starting to have a little bit of an upward bias. We got the 50 sitting right below the 200. And once that breaks, it will add to that push. It will give a little credence to the upside continuing as that 50 crosses over the 200, providing a little bit of a boost. Will that be enough to get to 39.37? We'll have to wait and see. Beyond that, we don't really have a whole lot. The next one after 39.37, 38 is 39.85. Now, you're going to hear calls for 4,000. I guarantee you that they'll probably start flowing out between now and tomorrow's opening. And then even after the opening, we're going to get everybody kind of rallying around that we're now going up, we're going up. But what I challenge people to do, and I could be 100% wrong here, but I just don't feel it. I'm going to pull it down to the 4-hour chart and challenge how this is going to be interpreted as a precursor to a strong bullish move, now just taking us back above 4,000 and on and up and up and up and up and up to 4,300. Now, does it mean it can't happen? Absolutely not. But I'm not sure how I would want to count it, or even how I'd want to support it in terms of what the market needs to do to show that it's bullish. One day, one session of a short squeeze, which basically that's really what it was on Friday, was they push that button and you're going to force the short squeeze, and that's exactly what they did. And it was across the board. So we saw a lot of things happening in stocks where, for example, in Tesla started down over $10 on Friday, but because they needed to get the market higher, that Tesla, ended up just stacking itself higher under big volume. So the amount that had to be pushed into the market, you're seeing evidenced by, oh, that was a very bullish rally. It's like, I can't deny that the move itself wasn't bullish because it was up, straight up. But that does not, in my view, suggest that it was anything else than an expiration play and a short squeeze across the board. We saw some good volume in the bond market as well. But again, it also was going through a Friday expiration, and it got pushed through that level, and the squeeze just carried it straight on up above 129. Now, they're under a different type of account in the bond market that would not correlate with what the equity markets are doing or what the equity markets are likely going to do. So in other words, it's like in the bond markets, I can count with the possibility for continued rally in bond prices, decline in bond yields could take the bond markets much higher price-wise, with the yields backing off and substantially from current levels. But again, I'm not seeing that in anything but the long end of the curve. Short end of the curve continues to suggest a march higher. So we've got a lot of conflict going on within our markets. We've got a lot of adjusting and a lot of accumulation distribution, et cetera, all still going as we move in to 2023. Now, mind you that this is just week 2 of 2023. So again, we may start to see even more 401k, more IRA money being shifted over, being put into asset management, and they're going to come in and they've got to put that all to work. Now, how high could it go? Well, in the S&P, I'm looking at 39.37 down to up to 39.85. I'm not suspecting that 39.85 will come in, other than on a Fibonacci basis for a wave 2. 50 to 618 comes in. So I guess, sure, on that basis, folks, I can't deny that the market can't, that the S&P won't go back above 4,000. It certainly can. But what I do see that it's doing, it's not suggesting that everything's okay, that inflation is taken care of, that we're heading into 2023, et cetera, et cetera. I think it would be a setup. And it's a setup where they would just collapse off of these levels. So for tomorrow, I would think that here in the S&P, we stand a good chance that we're going to continue to go higher. We're still not seeing any sellers. But then again, Asia's not open yet. Neither is Europe. So we got to get through those two sessions, adding in what's happening within those sectors over there and what's going on in the Ukraine, et cetera, et cetera. So it's a lot of factoring to kind of still be pushed around and done within the markets. And so we're going to continue to see this adjustment for a little bit. Now, the dollar has a play in this. Gold has a play in this. Inflation has a big play in this. And of course, just now we're going to start to be preparing for earnings. So earnings really start on the 13th. We've got some of the banks coming in on the 13th, and for Bank of America. And we have, let me see, we have Goldman Sachs coming in on the 17th. We have JP Morgan coming in on the 13th. So we have on the 13th, the Bank of America, JP Morgan. I could go down my list, but we do have the banks. They're going to kick it off. And that pretty much starts on the 13th of January. Tomorrow's the 9th. So by the end of the week, we should start to get a hint, at least how the bank's going to do. And that might hold things up until we get into that. And then, of course, the next Friday, again, is an expiration. Over in the NASDAQ, it basically is the same story. NASDAQ did jump out of the gate here as Globex opened much faster than the other markets, and it is continuing to hold up. Not off, it is off of the highs, the early highs that we saw a few minutes ago. So, but I would think here we need to get ourselves above 11,177. Well, we have, if it continues on, we've got that resistance there. That likely could finish it if it gets itself up there, because here as well, I'm going to drop down to that hourly chart and open it up. It just seems to appear to be got a 1, 2, a 3. This is a small 4, and we got a 5. Now, it might be A, B, and then we get a C wave down in that 4, bringing it down to here, and then still have that possibility to rally, or it just finishes up the rally now, getting itself above 11,171. Where do we have more resistance? So if I'm just going to take it on a straight ABC, I'm going to go from that low to that high to that low, and we have 11,174. Gets us to that high, and then above that we have 11,274. So we jump 100 points, and the market is very capable of doing that. Ultimately, we do have 0.382, which would be the pretty normal for a wave 2, and that's at 11,360. So resistance points to look for: 11,174, 11,274, 11,335 to 11,360. I'm not necessarily looking for it to continue just to jump and pile higher, but we can. And if they decide they're going to come in and do it again, just like we did on Friday, the name of that tune would be play along. If you're a position trader, you're going to have to either have a stop in place or be able to manage the trade. If you're a day trader, follow the money, follow the price action. And if the market should reach these highs and start to turn, because it would be finishing a minor second, putting us into a minor third, and this goes for both the NASDAQ and the S&P, I would be looking for it to begin to drop pretty steadily. Not just kind of come down, waffle around, come down, waffle around, come down quickly. Start cutting down back through all of these moving averages. And right now, the 21 is above the 55. The 8 and the 4 or the 5 are really pointing very strongly higher. We've reached pretty good overbought readings here on the hourly chart. So, even if nothing more than a pullback, the market is kind of getting set up for a downturn. The 200 period moving average, again, I use EMAs, not SMAs, is sitting here right at 11,012. Right? So we've got 11,012 right where that 200 is. Then if it turns and starts to come down and it breaks that, I'm going to say that minor wave 2 is complete and we are beginning to head lower. Again, what I would look for, if it is turning and we are going to start dropping into that minor third wave of the intermediate third wave, both pointing down, It should not take its time. It should sell and sell with a purpose, as I call it. In other words, they're just getting out. They're just turning, and it's now moving lower and just hitting bids all the way down. Start breaking below these moving averages on the hourly chart. That's where I'm going to leave it for right now. Next update will be on Monday, the 9th.